Attention business owners, for the first time in about 20 years, major changes have been made to the United States anti-money laundering laws. These changes, which were a part of the Corporate Transparency Act, will dramatically affect reporting requirements for corporations, LLCs, and other business entities that were created or are registered to do business in the United States. So a lot of my clients have been asking me about this, and I'm making this video to explain everything that you need to know about the Corporate Transparency Act. We're going to cover why it was created, who it's for, what the effects are, and when does it go into effect, and most importantly, how do you remain in compliance with the IRS so you're not dealt with a huge fine, penalty, or possibly something even worse. So let's dive in. All right, guys, welcome back to this video. My name is Karlton Dennis, and we are on Taxes Made Simple, my workshop where I teach you taxes and I break it down in a simple format. Now, in today's video, I'll be dealing with the Corporate Transparency Act. If you're unaware of what the Corporate Transparency Act is, this is a very important video for you to watch and understand, and make sure that you share it with somebody who is a business owner or believes in protecting their wealth. You see, the Corporate Transparency Act is a new anti-money laundering law that was just passed by Congress on January 1st of 2021. And as a part of this new law, the National Defense Authorization Act was involved. This law requires businesses to file a beneficial ownership information form, or BOI report. A BOI report goes to the Department of the Treasury's Financial Crimes Enforcement Network. This is known as FinCEN, F-I-N-C-E-N. Now, a BOI report is a report that provides specific information about the owners of the businesses. The reason why the government is suddenly requiring BOI reports to FinCEN is because FinCEN is cracking down on illegal activity such as money laundering, money fraud, tax fraud, corruption, terrorist financing. And in other words, the government is upping its game to try to catch criminals and prevent financial crimes from taking place. The government believes that with higher levels of transparency around business ownership, this will prevent criminals from trying to hide illegal property, cash, or capital gains in shell companies here in the United States, and try to catch people who have already done so.
I am not going back to prison, man.
Now, you might be asking yourself, Karlton, which businesses does the Corporate Transparency Act apply to? The Corporate Transparency Act applies to LLCs. So if you're an LLC owner, that is you, corporations, including S-corps, and any other businesses that were created by filing a document with the Secretary of State's office or a similar office in any state in the United States. For foreign companies, the CTA, for short, applies to certain companies that are registered to do business in the United States.
What did you say?
So that's right, guys. If you're a business owner that has your business set up in another country, such as Spain, you are licensed to do business here in America, then guess what? You will most likely have to file a BOI report with FinCEN under the new CTA rules. There are a number of exemptions, however. Most of these exemptions apply to large businesses that are already subject to substantial regulation from the government. There are 23 categories of businesses that are actually exempt from these CTA rules. These include securities and reporting issuers, governmental authorities, banks, credit unions, depository institution holding companies, money service businesses, securities brokers and dealers, securities exchanges or clearing agencies, other Exchange Act registered entities, investment companies or investment advisors, venture capital fund advisors, insurance companies, state licensed insurance producers, Commodity Exchange Act registered entities, accounting firms, public utilities, financial market utilities, pooled investment vehicles, tax-exempt entities such as 501c3s, entities assisting a tax-exempt entity, large operating companies, subsidiaries of certain exempt entities, and inactive entities. In other words, if your business falls under one of those categories, then you will most likely not have to worry about the Corporate Transparency Act. But one of the last categories I mentioned was large operating companies. Some of you who are followers of mine or working with me have large businesses. You might be wondering, what exactly does that mean? Well, to qualify as a large operating company under the CTA, a business must have at least 20 full-time employees. It must have a physical office location in the United States, and it must have at least $5 million in gross receipts from the previous year. So if your business fits this criteria, then you won't have to file a BOI report with FinCEN. Now, does the CTA apply to sole proprietors? Does it apply to general partnerships or trust? The CTA does not apply to sole proprietors. It does not apply to general partnerships or trusts. The reason is because these entities are not created by filing a document with the Secretary of State's office in a given state. So if your business is one of these structures, then you won't have to worry about complying with the Corporate Transparency Act for now. However, this could change at some point in the near future. Now, you might be asking yourself, what exactly is the information that I have to put on this BOI report? I mean, if your company is required to comply with the CTA, then you're going to have to complete this BOI report. In this BOI report, you will have to include the following business information. Number one, you're going to need to include your business's legal name and any trade name or DBA name that your business might have, which means you're also going to need to include your business's address, the jurisdiction in which it was first formed or registered in, and you're going to need to include the EIN number or taxpayer identification number for each of these businesses. For each of the beneficial owners of your business, you will also have to include this information. You'll need to include their legal name, the birth date, the address, and identifying number from a driver's license or passport or other approved document. This must include an image of the document that the identifying number is from. Now, who qualifies as a beneficial owner? A beneficial owner of a business refers to anyone who exercises substantial control over the reporting company or who owns or controls at least 25% of its ownership interest. So, if there are 4 owners of your business and each of you owns 25%, then all 4 of you would have to be included in the Beneficial Ownership Information Report, the BOI. When does the Corporate Transparency Act go into effect? The Corporate Transparency Act goes into effect on January 1st, 2024. What this means is that it's right around the corner, so you really can't sleep on this information. You have to be ready and you have to make sure that you file your BOI report with FinCEN before the deadline passes. You might be asking, Karlton, what is this whole deadline? If your business was created or registered before the 1st of January 2024, then you have to file your BOI report by January 1st, 2025. If you're planning on starting a company after January 1st, 2024, you'll be required to file your BOI report now moving forward with FinCEN within 30 days of receiving your actual or public notice that your company has been officially created and registered. So make sure you write all of this information down. Write these deadlines down because you do not want to miss them. What happens if you miss the deadline? Or do you file your BOI report with FinCEN if you miss the deadline? There are severe consequences for failing to comply with the CTA, and they can come at you pretty quickly. For starters, you can be fined $500 per day. That can start to add up pretty quickly. That's right, every day that you are in non-compliance with the CTA, you could be forced to fork up some serious cash over that. Luckily, there is a maximum final penalty of a max $10,000 that you can be fined, but that still adds a lot of tax onto the tax that you're already paying. The penalties don't stop there, however. In fact, if you fail to comply with CTA rules, then you could be forced to go to jail and serve up to 2 years in prison. This is very similar to tax avoidance and you not filing your tax return.
Can you imagine getting, in jail? It would be horrible.
Now, that is some pretty serious, harsh consequences from the government. So they want to make sure that you're taking the Corporate Transparency Act pretty seriously, unless you don't mind spending 2 years in prison. I mean, I don't know who would want to do that. So just make sure you comply with the CTA.
Do it! Just do it!
Let's go over how to file your BOI report. Now that you know what can happen if you don't file the BOI report, you're probably wondering, what exactly do I need to make sure I do? You will be able to file your BOI report for your business electronically right on the FinCEN website, which is going to be posted below this video. However, FinCEN is currently not allowing any BOI reports to be filed right now. In fact, it will not start allowing companies to file their reports until January 1st of 2024. So, who will be able to see your BOI report? That's the one question that I want you to think about. A lot of business owners actually prefer to keep their ownership anonymous, and many estates allow this high level of confidentiality for business owners. For example, you can create an anonymous LLC in Wyoming, Nevada, New Mexico, and Delaware. If you have an anonymous LLC, you will have no disclosure ownership information available online. That means that identity thieves, stalkers, or other people you don't want to know knowing about your business will not be able to tell who actually owns the LLC in question. So naturally, because the Corporate Transparency Act requires a lot of information to be provided about business owners, many people who prefer their ownership in their businesses to be anonymous, they're worried. Like, they're blowing me up right now inside of my chat box. And they want to know, are they going to lose their confidentiality? Are they going to lose their anonymity? Well, the good news is that there are only 6 types of entities that will be able to request information for your BOI report after you file it with FinCEN. Number 1, federal agencies engaged in national security, intelligence, and law enforcement. 2, state law enforcement agencies with a court order. 3, the Treasury Department. 4, financial institutions who have your consent. 5, government regulators or financial institutions. And 6, foreign authorities requesting information through a United States agency. So only those 6 entities will be able to actually get access to your BOI report. Okay, guys? So don't freak out.
Last thing we need is a major freak out right now.
The information will be entered into a database, and members of the public will not have access to this database. Only the 6 approved entities that I just named, in addition to FinCEN, will be able to access this information. All right? So hopefully that gives you a little bit of peace of mind. You guys aren't blowing me up.
Oh, I felt that.
We reached the end of this video, guys. Well done. You made it this far. You got through a tax video. Congratulations. The Corporate Transparency Act is pretty interesting, isn't it? In this video, I showed you what you needed to know. I don't want you to feel like you have to go spend all weekend studying the Corporate Transparency Act. Here's a recap. The Corporate Transparency Act is going to require many business owners to provide beneficial ownership information to the government in the form of reports filed with FinCEN. A large percentage of businesses will be required to file these BOI reports. However, some businesses, such as large businesses, sole proprietor businesses, and other businesses that are already heavily regulated by governments, such as banks, will not have to. A failure to comply with the Corporate Transparency Act results in a $500 penalty a day, up to $10,000, maximum 2 years in jail. We learned that. Businesses created before January 1st, 2024 will have to wait until January 1st, 2024 to submit. And if you create a business between January 1st, 2024 and January 1st, 2025, you have 30 days to comply with the IRS to get your information over to FinCEN. The bottom line is that the Corporate Transparency Act is definitely something you need to pay attention to and comply with. The consequences of neglecting the CTA can be a little bit steep, which is why they have a lot of fail-safes in the way to make sure you're doing your job of filing your information. If you have any questions about the Corporate Transparency Act or what your business needs to do to make sure you stay in compliance, you're more than welcome to get in touch with my team. We have links below this video. We would love to get on the phone with you and assist you with your tax strategy. For many of you guys that are wondering how you can work with me, you can also click on the link to sign up for the Tax-Free Wealth event. This is the event we hold every 2 months, which gives you the opportunity to learn with me for 5 days, the advanced tax strategies that I teach, and then an opportunity to partner with us on doing some tax plans. If that is you, I look forward to seeing you there. For all other members, I look forward to seeing you guys on the next video. Thank you so much for liking. Thank you so much for commenting. And thank you so much for subscribing. Karlton Dennis out.